Okay, so my name is Alex. Nice to meet you. Maybe I know you. I saw some familiar faces. I'm an entrepreneur and a VC. So I'm a GP of EdTech Booster Capital. We invest in pre-seed and seed startups. Thank you for attending today's webinar. Let's meet each other and maybe, just to get to know each other, is chat available? Yeah. So if the chat is available, can you write in the chat what's your product, what's your stage, and what's your country, if it's available? If it's not, I can make it available. So it's not available, right? Okay, I see it. Okay, it's not. Give me a second. I'm sorry about it. Okay, whatever. If it's not available, let's skip it. So thank you all for your time. And today's topic is how to launch your startup in the US market. And if you have any questions, you can send them in Q&A form, because we're going to have Q&A session after the webinar. So today's topic, why you might want to go to the US market, how to attract investors, and how to test your product in the US market. This is like 3 main questions which I want to cover today. So who can get 100% value out of this webinar? I would say if your product is B2C or B2 small and medium business or B2 SMB, you probably will get a lot from today's webinar. Also, if your product is EdTech, FinTech, or Health Tech, it's also probably for you. And third cohort who can get a lot probably is if your product is a service to people. This is also going to be really useful for you. And at the end, I will tell how to get investment from our VC fund, because we have a VC fund. It's called EdTech Booster, and I'm going to tell you what we can do and how we can help you to go to the US market. So today's agenda is pretty simple. It's going to be 80 minutes, 60 minutes of me speaking to you, and then 20 minutes of Q&A session. So if you have any questions, if you don't understand something, just ask a question in Q&A form in Zoom, okay? So firstly, or before we start, I want to introduce myself and tell who am I and what journey I've made. So I'm quite a big guy. I'm 6'8". I used to play basketball semi-pro. I'm Israeli-Ukrainian entrepreneur, and right now I live in Silicon Valley. So this is my wife, Anna, and we worked together last almost 10 years. We built all traction together as partners, and this is my dog, Joy. It's a Maltipoo. I'm an entrepreneur and the VC in education from 2010. This is me. I started my career as a tutor, as an English teacher, then 13 now years ago. I started to teach people. Then I had so many clients, so I had to open a language school, then second school. Then we end up with 120 plus open schools. We hit 5 million annual revenue in 2019. And we acquired more than 30,000 clients for the last 3 years of the company. So we had different brands, from language schools to musical schools, dancing schools, yoga studios, fitness studios. So probably we know a lot about how to launch and scale educational products and B2C models. So this is how it looked like. Firstly, it was offline. Then after COVID, we shifted it to online. So we were doing it without any VC funding. We were bootstrapping, and we sold the company in 2021. During today's webinar, I will tell you what mistakes we made and in our examples, so you can avoid it, those mistakes which we made. So after I sold the company, I thought, okay, I got a little sabbatical, and then, okay, what's next? So we obviously made a lot of fails during this, journey. And we knew how to launch and scale educational models. And my mission was always to boost founders to grow faster. So I always was really impressed with entrepreneurial mindset. And I know that if you are an entrepreneur, you will be successful. But I also understand that I really want to help you guys to grow faster with us. And I want to share our knowledge, because I used to also, as an entrepreneur, I used to be, beginner founder who needed somebody like me. So based on that, we created EdTech Booster Capital. We invest in pre-seed and seed stages. We can help with marketing, and we can help with fundraising if our amount of investment is not enough. We have a unique feature. We validate startups with launch and marketing tests. And so what we do, we run a marketing campaign to validate your product in the US market. And after successful test, we invest in a company and help to scale later on with our marketing team. We have 8 people in the marketing team. So basically, we can give you money, we can give you marketing, and we can advise you. We can provide you with advising. This is what we do. So if you feel like right now, even you understand that we can help you, you can fill out the form here, and you can scan it. It's a QR code. And then if we see that we have a mutual potential, we can have a meeting with you. So please fill out the form if you feel like you want to get investment from us, or we can help you anyhow. Okay, let's start. So part 1, yeah. Why the US market? I speak to a lot of founders. Like last year, we attracted about almost 2,000 leads of founders. And I understood that a lot of founders, and probably you, do not understand why you should go to the US market, and why don't get some traction in your local market. So it's all depending on your goal. So I think the first question which you should ask before even the US market is, what's your goal? And probably there are 2 answers. So first goal is on financial side, of course, the goals, is EBITDA. So EBITDA, you want to make money like every month and put money in your pocket at the end of the month, or you want to grow and sell your company at the end of like 5 years time period or 7 years time period. This is kind of, because you need to understand at the beginning what do you want, because approaches are totally different. For example, myself, I was doing first, like almost all these 12 years, I was doing the first thing. I was focusing on EBITDA. I was focusing on how much money we make and how much money we have at the end of the month. And it has pros and cons, so you need to figure it out now. If you want to grow and sell your startup, probably the exit going to be much higher at the end. So first, determine your goal. What do you want? Do you want to have a classical business where you get some money at the end of the month to your pocket and buy some stuff, or you want to grow and sell it at the end and grow capitalization? So speaking about the US could be useful for the second one. So 57% of all money which are spent worldwide spent here in the US. I realized it in October 2021 when I was in Stanford course, and I saw IRS report. So in the US, you can look at IRS reports. IRS, it's got Internal Revenue Services, something like that. So it's about taxes. And you can see where people are spending their money. So I looked out here, and it turned out that 161 billion is spent on education in 2021 in the US market only, whereas the whole the whole market size of educational products worldwide is about like 240 or 260. I don't remember how much exactly. So 57% of all money which are spent on education worldwide are spent here in the US. So here you have the biggest market. Just imagine the biggest market, and majority of buyers are here. The majority of exits are here. Again, according to Crunchbase, you can check it. You can go to Crunchbase and see where exits are happening. So majority of them are happening either in China or in the US. Some of them are happening in India. And also, what is the most important, I think, to understand, the most important, that here in the US, you have high multipliers. What is a multiplier? So this is a question which you should ask yourself. Don't commit my mistakes, because I didn't ask these questions to myself when I was doing this 12 years journey. Because multipliers, it's the most important question when we speak about capitalization. So the multiplier is, it's basically a number which defines your capitalization. So let's have an example. If you have a classical business, not a startup with a capitalization with fast growing, you have a classical business. Let's say I have somebody like I have. You have an annual revenue of 10 million. Let's say your annual EBITDA, again, EBITDA is like money which revenue minus cost is your EBITDA before taxes. So it's like your revenue before taxes. So let's say you have a business which generates annually $10 million, and your revenue, your EBITDA, is 1 million, right? So you have 10 million revenue, 1 million is EBITDA, can be 2 million, whatever. So what is your evaluation? Or in other words, how much is the cost of your startup? If I want to buy your business, how much would I pay you for that? So the thing is that if it's not a startup, if it's a classical business, your multiplies are going. So this is 2 is a multiply. So your multiplies is on EBITDA. So I'm a potential buyer. Let's say you're a potential seller. So I would say, okay, how much is your EBITDA? You say 1 million. I would say, okay. And these multipliers, by the way, this is multipliers are in Eastern Europe. So in Eastern Europe, the average multiplier for offline business or online business is 1 or 2, from 1 to 2. So let's say your evaluation at the end of the story would be 1 million multiplied by 2. So you have 2 million, your evaluation at the end of the story. So you have a business with 10 million in revenue. Let's say your EBITDA is 1 million. So 1 million multiplied by 2 is 2 million. So this is probably, if you have this kind of business somewhere in Eastern Europe, or let's say in some European country, this probably would be your multiplier and would be your exit if you want to sell it, right? Whereas, let's see on a startup in the US. So let's say you have a business in Eastern Europe, like I used to have, and you have a US company, but with a different approach when you get investment and you grow it. So we have the same company, basically the same amount of clients, everything is the same, and you have a revenue of 10 million. You see, annual EBITDA is question marks. Why? Because it matters, but it does not really matter. If you're a startup, the EBITDA does not matter. What matters is something different, which I'm going to tell you. But it doesn't matter how much of like every month or every year, how much you have, because your multiplies, your evaluation is going to be multiplied. So your revenue gonna define not EBITDA, but your revenue gonna define the cost of startup. You see, so if we speak about classical business, your EBITDA defines the evaluation. But if you speak about startup, revenue defines the evaluation. It means at the end of the story, if you want to sell your startup, which is in the US market with a scalable technological product, the evaluation gonna be 10 million multiplied by 5 or 10. It can be from 5 to 10. So the evaluation at the end gonna be 100 million. So when I realized that, I got this paradox. What is the paradox? That 100 million is much more than 2 million at the end of the story, because basically I spent, for example, 12 years in this field, and my first school I opened in 2012, and I sold it in 2021. So the thing is that you spend the same amount of time and energy, but at the end of the story, the difference is huge. Why? Because in the first case, you were doing business focusing on EBITDA and how much money you can get every month, every year out of the business. Whereas the second approach is, it's all about growing revenue. So the only difference is the market and the approach. So do not commit the mistake which I committed. If you wanna, again, if you wanna do some scalable business, and you wanna get and even with the capitalization, as I said, it's even easier. Why? Because you don't have to think about EBITDA at the moment. All you need to think is about how to get more revenue, how to get more clients, how to get more market share. So now a question is for you. What do you think is an average exit in EdTech in the US? So how much does it cost to buy a startup in the US? So if you have a startup in the US, what do you think? So the average exit is 237 million. Again, you can check it in Crunchbase. You can go to Crunchbase and Google, we search last 3 years. Probably you're afraid to go to the US market now, and this is totally okay. And you might think, okay, I start to make traction in the local market for now. And then when I have first traction, or I get like 1 million or $2 million, then I would go somewhere else. So it's a big illusion. I know a lot of companies who failed to go to the US market or failed to go somewhere abroad because they are sticked to their local market. And I am an example of it. So I also thought, okay, I'm going to go internationally when I get some first traction, but it's really difficult. And I'm sure you know a lot of examples, because when you have a first traction, when you have 1 million revenue or 2 million revenue, even a $500,000 revenue, you have something to lose, and you cannot be focused 100% on going to the US market. So the question is, do you want to have an exit with like 100 million plus? If you want to have it, you need to start to go to the US market yesterday, because a lot of guys are doing it now. Again, if you want to have a classical business, a EBITDA business, yeah, it's a good way to go to your local market and get some money from your local market. So the question is, okay, Alex, that's great. US market is great, but what to start from? How can we start? We go to part number 2. So how to attract investors. By the way, if you have a pen or something like that and a list of paper, it's better to write. Yeah. So 4 main criteria. And again, I'm going to tell you about our criteria and probably about any other investors' criteria, which I know here in the Valley. So first important criteria is a market size. How big should be the market size? So can you answer this question in your head, or just think about it? How big? Like 100 million market size, is it enough? Or a $500 million market size, is it enough? Or 10 billion market size, is it enough? Actually, everything, it depends on your goals, yeah, on your target exit goal. And to determine the market size, use this sum, SOM. So what I recommend you to do, I'm not going to tell you what it is right now, but you can Google it like after the webinar or right now. So this is how you determine the market size. And it's all the amount of market size is depending on your target exit goal. So let's calculate. I have an exercise with you. So let's say you want to sell your startup for 200 million, right? You remember? And let's say at the end, we would have 5 multiplies. You remember what is a multiply? Yeah. So it means that what should be our annual revenue to get this 200 million of evaluation. Yeah. If you want, basically, we want to sell our startup for 200 million with 5 multipliers. So what should be the annual revenue? We need to divide 200 by 5. So our annual revenue should be 40 million. If you have 40 million with 5 multiplier, we would have 200 million exit. Now, probably 5% or 10% gonna be easy to get of market share, of potential market share. So usually we calculate 5%. So you have 40 million. This is our goal, to get 40 million. And then if you get only 5%, what should be the total market size? Because we cannot get the whole market size, right? We can get only a portion of it. And also it should be like some potential to grow. This is what investors buy. By the way, investors buy the potential. So 95% is a potential to grow. And this is what exactly people who are buying your startup, you need to understand. They are buying basically this. They pay you 200 million because you have only 5% on the market. And they believe that probably they would have 95%, not 95, but there is a more space to grow. This is why startups are sold in the US market. So if we calculate that your potential market share is 5%, this is what we do. Your minimal market size should be 800 million. So you should have a potential target audience in the US market who can pay annually 800 million. Let's do another example. If you want to sell your startup for 200 million, you have 5 multipliers, which is average for the space. And your market size, you need to have 800 million, but your market size is 100 million or 50 million. Let's say your real market size is 50 million only dollars. So what to do in this case? In this case, there is no way that you're going to sell your startup for 200 million. No way. And you need to understand that that is why exits are not happening in little markets. Because basically, investors don't have a reason to buy your startup. Because even if you have, let's say you have a large amount of revenue, you have no potential to grow. You got the whole market. You can be the first one, like we are. We were top 2 schools in an Eastern European market, but we have no potential to grow. That's why investors don't pay you a lot of multipliers, because you have a limited potential to grow. You can have this exercise with your, you can build this Excel sheet and, play with it. So it's pretty simple. Again, you need exit goal, multipliers, annual revenue, which you want to hit at the end of the story, and potential share. And you basically divide it. Okay, you figure it out and you understood that the market size is too small. What to do? I face it like a lot. I think about 10 or 20% of founders which we speak have a really little market size. It can be just about the product. the product is super niche, or it can be about the geography. But this is why we are focusing on the US geography only. So if your market size is too small, just change it. You can change it by geography, as I said, or by product, by pivoting your product. Okay, we have a big market size. What's next? So yeah, how are you? These figures are, so we have 27 minutes of webinar right now. If you don't understand the numbers, by the way, it's okay. Just continue. And if you want to get more, information from me, I post some insights in my LinkedIn page. So feel free to add me in LinkedIn. Okay. So then you have a market size. Then what's next? When you have a market size and you have a lot of people who are paying for products like yourself or spend some money on similar products, then you need to find the market gap. And this is a second thing which investors are looking for. So this is, we are going to part 3, how to test your product in the US market. First thing you need to do is analyze your competitors. So you need to have a list of your competitors in the US market, similar products and kind of your products. So companies which you're gonna compete with. Then you need to understand how saturated is the niche. So who are you competing with? Ideal result is you have weak competitors and low saturation. By saturation, I mean that you have no monsters. For example, if you have let's say you are competing with Disney Plus, if you are competing with YouTube Kids, if you are competing with like monsters, it would be really difficult to get the clients from them to your product, especially if you are early stage. It should be a reason why they should go to you, not just because you are the best, yeah, but it should be a reason why. So if you have like super monsters and big companies in your niche which already got the huge proportion of market, probably the saturation is high and it's going to be really difficult to compete with them. So try to find the gap. Okay, Alex, our product doesn't have a gap. We don't have a gap in the market. What to do? Change it. It's difficult. I think the most important is to find the market size and the market gap. This is super difficult and this is super important to find this connection. Because if you don't have a market size, you could not be sold. If you can find a market gap, you cannot compete with people, you cannot get traction. Your business model wouldn't work. Okay, we have a gap, Alex. What's next? custdev. Again, you understood that your product in the US had a huge market size. You understood that your competitors are weak. You don't have monsters who are competing with. And what's next? You do custdev. What is a custdev? So the best way to understand it is to go and read the MOM test. Just read the book. It's super simple. Read the book and you will understand. And then use SurveyMonkey or live interviews with your potential target audience, with your potential clients. It is important to understand what is the aim of custdev. The aim of custdev is to understand fully who is your target audience, what is the pain of these people, and what offer or what solution you should give them. Example. Let's again do an exercise with you. Are you here? Come on, let's do an exercise with you. So we have a company here. The product of the company is science kits. So you order boxes like kits, and then you unpack it and do some, experiments and some exercises with your children. This is what you do. We have a product here, science kits for children. We have a target audience, grandmothers. So what do you think when we perform a custdev? What do you think we realized? What is the pain of grandmothers? And what solution or offer we used? Think about it. Again, product is a science kids, target audience, grandmothers, pain and solution, or pain and offer. So actually, it was surprising, but from interviews, we realized that grandmother's pain is that they don't spend enough time with their grandchildren. This is simple pain, but we didn't know it. So based on that pain, we created an offer or a kind of, solution for this target audience. And it was like that. Would you like to spend more time with your grandchildren? Like a question. This is a perfect gift for you. Science sets for children from 5 to 15 years old. So this specific ad creative had twice more conversion rate. Why? Again, because the moment you have a specific target audience, specific cohort, the moment you understand their pain and you push on button, you push it, the pain button with an offer which they like, they will proceed. They will do the action which they want. So the most important, again, market size, market gap. Then you need to understand your target audience, what they want and what pains they have. And you can understand the not just one cohort, not only like grandmothers are buying this product, but grandmothers is just an example. Then you have a list of target audiences, you have a list of pains, and you have a list of your offers or your solutions, right? These are only an ideas, but you need to check it. You need to then verify this or validate this. So you create ads, creatives, you create a landing page or just a lead form. Okay, we have a target audiences, we have a pain, we have an offer. What's next? Next, you should launch a test drive or test marketing campaign with a limited budget on Facebook, Instagram, or Twitter to get first clients. Again, why is it important? You can say, Alex, and this is what I hear a lot, like, Alex, we have first clients. They are my like family and friends, or they went from, I don't know, my university. Actually, if you speak about business model and if you speak about testing, it does not matter. Why? Because we need to have a source of clients which we can scale easily. So your source of clients, which is a word of mouth or your university or your family and friends, is not enough to scale it, because we need the next step, we're going to scale it. So we need to figure out the source of clients where we can easily scale it. I'm going to talk about it later a little bit when I will talk about a business model. So that is why we need to test those messages in real clients who don't know your product, because this is what will happen next. So again, you have this target audience pain offer in your head or on the list. You need to test it because it might be an illusion. So you create creatives, landing page, or just lead form, and spend some limited budget, 1 or 2K on Facebook, Instagram, and Twitter. Then you get results, then you analyze it, then you iterate it to make it better. One important thing, you don't need even an MVP for that. So to get first metrics, you do not need MVP. To me, MVP is not about the product. To me, MVP is CAC LTV ratio. So I'm going to explain you what it is if you don't know. But to me, MVP is this connection: market size, market gap, who is the target audience and why they should buy your product. And first test, this is MVP, test of sales. This is MVP to me. Because if you have a nice product, if you have a super product, but you don't have a source of clients, it does not matter. It won't fly. So first, you need to think about messaging. And what is happening if you don't do that, usually? So usually startups are pitching. If they're super good, they get funding, and then they spend like 3 months, 6 months, 1 year, 2 years on developing a product. They developed a super nice product only in their heads. It can be an illusion, and usually it's an illusion. So they develop a product. They might even consult with their friends and etc. But the thing is that when they have a product and when they start to sell this product, it turns out that nobody actually needs this product, or they cannot sell it. Again, why? Because first thing you need to do, you need to understand who you're gonna sell and how you're gonna sell it. You need to estimate the source of sales. And when you have it, you need to adapt your product to their needs, to potential, to real clients' needs. Again, not to your family and friends' needs, not to your university friends' needs, but to real clients, because they would say, they would vote, buy or not buy again or not buy again. And this is where you have more realistic information on the field, yeah, when you test it. So now let's speak about business model. This is a third thing which we do. What is a business model? So let me give you an example and one more story about myself, how I failed to have a business model. So I told you a story, I showed you a picture when I was a tutor. I had about 50 clients. And when I had about 50 clients, I realized that I have no time to accommodate more clients. So I realized that I need to open a school. So I opened first school, it was in 2012. First month, I hit about 10K EBITDA. So you remember, my goals were to hit EBITDA, money in the pocket. So 10K, I put it in my pocket and I said, okay, I'm gonna be a millionaire. I know how to make business. My first month, it was September 2012. Then I opened in a year, in 2013, I opened a second school and it was horrible. I lost all my money. I almost went bankrupt. Actually, I even loaned some money from my father to pay payrolls to my employees. Why did it happen? Because actually, I thought I have a business model, but actually I don't. When I started to scale it, it turned out that I don't have a business model. So there are two important things, in B2C. First is lifetime value, and second is customer acquisition cost. Again, customer acquisition cost, not from word of mouth, not from your friends, but from real people who you don't know, specifically better from Facebook, Instagram, and etc. What is a lifetime value? Lifetime value, again, you can Google it. What is the customer acquisition cost? You also can Google it, but if you speak simple, it's just amount of money which you pay to acquire a new client. So let's say you go to a market and you pay to get new clients some amount of money. If you use marketing, this is how much it should be, a number which you pay for every new client. And it turned out in my model that my CAC, my customer acquisition cost, is $100. So I pay to acquire every new client, I pay $100, but I make only $80. So it means with every client, I lose money. And this is why my second school didn't fly. And that time I didn't know it. I didn't know that I should calculate it. I didn't know that there is a CAC. I didn't know there is an LTV. And when I realized that basically I lose money every day, I fixed it. So then I started to think, okay, how I'm gonna boost my LTV? And ideally, you need to have a cash machine. Imagine you have a $100, you have a cash machine, and you put $100 here, and from the other side, this is a black box, right? You have $300 or more. This is a business model. And the important that from here, you have a big source. The whole market is here. Let's say in Facebook and Instagram, you have the whole market, because the penetration of the of Facebook is quite, or Instagram is like high. So again, $100 here, $300 here. This is a business model, not $100 here, $80 here. This is not a business model. And committing these mistakes in my past taught me that business model is super essential to scale the business. And this is why we test founders' business model and test founders' product before we invest, because we know that this is super important, and it's better to solve this problem now than later, because later it's going to be super risky and it's going to be super. It was a crisis for me, like personal crisis and company's crisis, believe me. So the ideal CAC LTV ratio should be 3:1 or 3+1. Alex, it's okay. I like what you're talking, what you're speaking about, but our business model doesn't work. What to do? I think you know the answer, right? Change it. Change it now, because the more you wait, the more difficult it's going to be. Believe me, I know it. Okay, Alex, we have a business model. What's next? Then pitch investors. Again, this is only my opinion. There are a lot of other ways to succeed, but I think if you want to go to somebody and ask money, you need to understand market size, market gap, you need to test it, and you need to have a business model, at least potential business model, which is tested somehow, and then you pitch investors to basically launch and scale this business model, or just scale it if you already have it. So if you, especially now with a recession, it would be really difficult to get money without it. So let's revise what we discussed. First, why the US market? Again, if you want to go and make classical business, probably it's not for you. Yeah, you can make it in your local market, no problem. But if you go to the US market and you're gonna win, the average exit is 237 million. And you remember paradox, like 9 years of my life could be converted into 100 million or 2 million. And your life. How to attract investors? Market size and traction. This is the most important. How to test the US market? Find the gap, come up with a target audience, pain and offer, and test your business model. Test it with real customers. Now, part number 4, how we can help you, what we can do. So again, we invest in pre-seed and seed stages. We help with marketing. So before even investing in a startup, we run a marketing campaign to test the business model. If amount of funding which we invest is not enough, we can help with fundraising through our network. And we can provide you with advising services again. So what's the roadmap? How we do it? So first, founders fill out the form. Then we have a first meeting, probably 2 or 3 meetings. And then we start a test drive. Test drive usually takes about 3-4 weeks. Then we sign a term sheet and invest. Recently, like 2 weeks ago, we invested in our first company from Mexico, but they are in the US market. So we have an experienced marketing team, and our sweet spot is somebody who are now outside of the US, but who want to launch and scale their product in the US market. This is our sweet spot. So if you are somewhere outside of the US, or if you are in the US and you want to go here and you want to launch and scale your business here, this is who we work with. And then what is a test drive? What we do? We basically analyze market size, we analyze market gap really deep. Then we do custdev if it's needed. So we find target audience, pain, and offer connection. And then we run a marketing test. So this is what we do during the test drive. We do marketing tests for free, so we don't charge. This is our part of the deal. And we get equity only if we invest. So we get equity of a startup only if we invest in a company. And also provide those services which I mentioned, like marketing services, advising services if it's needed. So the first step to start to work with us is fill out the form. So if you want to work with us, just fill out the form. Secondly, if you know, so we are constantly looking for founders. If you know anybody who might be interested and who want to go to the US market, probably tech founders behind this post, so below this post. So I post in LinkedIn, I post the message about this webinar, just tech founders who might be interested in it, and they can register this webinar and we can send them the record of this webinar because we are recording right now. Okay, so now let's have Q&A. So if you have any questions about me, about content which I gave you, feel free. Okay. Are you interested only in tech companies? So right now and last year, we were focusing only in tech, but actually our approach on validating startups and validating their products in the US market is applicable to B2C sphere overall, like health tech, fintech, as I mentioned, could be probably somewhere, so could be probably our interest. So what is, it's better just tell me what is your startup, like what product do you have? When you start providing online live courses for a specific market, which is having a lot of competitors who provide a very cheap courses via Udemy, and potential clients are not open to try new things, how to fix this gap and grab people to buy our courses? Okay, Mohammed, look, this is what I told you. You need to understand that if you have competitors who are monsters, it's really difficult to compete with them. And you have two options. So first option, just change it, change the market, change your product. Or second, try to niche yourself, try to be different from Udemy. Try to find answers. Why should people buy your product? How to find it? I told you. Understand your target audience, understand what are their needs, and test it with your solution, with your offer, through digital marketing campaigns, for example. Only with like iterating and testing, it works. For example, we used to have a company which had, I like the founder a lot, but the niche was super saturated. It was an app for children. Like it was an app, edutainment app, right? And when we realized that the founder is competing with Disney Plus, YouTube Kids, PBS, so like the market size is oversaturated. Then we told him, look, this specific app, which you have right now, it's going to be really difficult to compete with those. But if you can niche yourself to a specific pain of target audience, let's say children with some, with some difficulties, like let's say children with special needs, or children with like you can solve a problem of getting asleep or something like that. So you need to be different. You cannot be the same and people won't buy you because they already know monsters. Why they should buy you? Answer this question. Why? Okay, let's imagine we are opening a branch in the US. Now the question is, that matter the state we are landing. Anonymous attendee. So actually, usually you can just incorporate yourself in Delaware as a C Corp. So this is, I would say, what the majority of startups are doing. Just incorporating in, and by the way, we are helping our startup with these kind of questions. If you invest, we can help to incorporate. We have lawyers, and it's not really, it's like $500 or something. So it's not super expensive. Do you have a minimal ticket size? Yeah, we invest 100K and 200K as a follow-on, so 300K totally. Do you invest in companies with LATAM market in view and with future expansion in US, but with the currently focus in LATAM? Franca, this is what I told you. Thank you for your question, but if you go to if you are growing in LATAM and your focus is growing in LATAM only, this is a little probability that later on you go to the US market successfully. I told you, and I have an example of myself, and I have example of a lot of companies which I know, a lot of founders which I know. So if you want to go to the US market and you feel like this is something you want to have, yeah, feel free to fill out the form. If you want to go to the LATAM only, probably right now, at least right now, you can fill out the form, but right now this is not what we are doing. Again, because of exits. This is all mathematical stuff. Exits. What could be the exit? So let's say we invest in 10 companies. Look, this is really important to understand how investors think. If we invest in 10 companies, 8 failed, 2 are successful, and 1 is more or less successful, 1 is super successful. If a super success means that at the end of the story, we can have 20 million valuation on exit or 50 million valuation in exit, it does not work. It just doesn't work. Because if the startup is successful, we want it to be a billion valuation or 2 billion valuation, 5 billion valuation. And this is super rare in LATAM markets or some markets outside of the US and China. And this is how investors think, because they need ROI, right? This is what they need. So amount of exit should be big enough mathematically. Market side. Is the focus B2C only? Why B2C? Again, and I told you at the beginning, our focus is B2C and probably B2 SMB, so small, medium. Why? Because of the sales cycle. In B2B, the amount of money which you spend to acquire clients could be a year, 2 years sometimes. So we don't have time in early stage to wait for it. In B2C segment, we can test the founder's product in 4 weeks. Okay, give me a sec. So again, if you have more questions and you wanna know more, just enter the form, fill out the form. The form, let me show you the form. It's like super easy. It will take about I don't know, 10 minutes maybe. So go here and this is a form, you see? Sorry. So this is a form. This is how it look like. Okay, yeah. So if you scan the QR code, you go to Google form and just fill it out, right? Again, QR code is here. If you cannot scan it, probably you will have You will have an email after. Okay. So we do B2C mostly because of the cycle of testing. How is it possible to determine TAM at tech startup? Yeah, Alex, what we do, we go to Facebook and we try to understand how many target audience is in the market. Let's say you remember these science kits. So we go to, we try to understand who can be a target audience. Probably it's like parents of children from 5 to 15 years old and grandmothers and grandfathers. So we try to figure out how many people we can reach in Facebook and Instagram, and we have a figure. Let's say we have 1 million. Then we go and understand what is an LTV. So through analyzing competitors, we understand what is the average LTV. We can project it. Like, let's say if they pay 100 a month, probably it's going to be 500, 300 bucks LTV. So we then just multiply this amount of people which we found on Facebook, and we multiply it by this LTV, and we're going to have at the end market size. This is one approach. The second approach is just Google it. Just Google. There are a lot of researches and everything. Just Google it. And there are a lot of articles how to establish TAM. Could you tell us why you invested in Logic? Logic is a company which we invested recently. Again, I told you 4 criteria, right? This is the same for us. So this is basically our criteria: the huge market size, the nice market gap, founders who can perform, because they already had some traction in their local market, which is good, and we have a chemistry with the founder. And we tested the business model. So we ran a marketing campaign for that company, for that startup, and it turned out good figures, good numbers. This is why. Market size, market gap, business model, founders. This is what we are looking for. And of course, a chemistry and understanding between each other. Do you invest in company that have a product available in the Apple Store but is not doing any revenue yet? Yes, we can. For the market test, how do you decide what price point to test at? When you analyze your competitors, you will understand it. You will see what is an average price of your competitors. We have like Google Sheets when we see all competitors and we see all prices before we run a marketing campaign. Again, market size, market gap. By market gap, I mean you analyze your competitors, then you go target audience, then you should understand what is the pain of target audience and what is the solution. Then you test. This is how you do it. Could I have your LinkedIn link? I think I already, so here is a link to the post about this webinar. So basically you can scan it. Or just, Anna, can you add to the chat these links? Okay, let me, give me a second. It's gonna be on chat soon. Give me a second. I'm going to send you a link. So this is a link to fill in out the form. Okay, I cannot. Okay, just, I don't know. I think wait a second. Okay, good. So this is a link to and this is my LinkedIn page. As I said, if you know any founders who might need our help, feel free to share my link with them, my LinkedIn. Where is the chat? Okay. Okay, let's move forward. Next question. What stage level of validation to invest do you invest in EdTech companies, both as an angel and with an EdTech booster product? Brent, I don't quite understand your question. Can you repeat it, please? How long does the entire investment process take? From the first point, I would guess we want to make it as short as possible, but right now it's about 6 weeks, I guess. LMS for language schools with tons of specific functions for solving many pain there. If it's element for, okay, probably, yeah, probably. I mean, I used to have a lot of language schools, so probably, yeah. Do you have a focus that is only on B2C, or do you invest in support B2B SaaS tech startups? It's all depending on sales cycle. So again, our approach is firstly test before invest. So if you can test your product in the market with like limited period of time, then yes. But usually if it's a B2B SaaS, if you sell your products to colleges, it's not gonna, so it's not our thing. We are a legal tech company building the will management on blockchain for law firms. Yeah, I would say yeah. Yeah. This is where we understand. We understand any service, how to build any service for people. Yeah. We are UK-based tech company. Do you require the company to move in? For sure. If we invest in a company, but this is what everybody will tell you. If you want to get money from US investors, you should register your company in the US. But it's not, I mean, it's not difficult. Where are you located? In the Valley, in San Jose. I'm building a math app for age group. Will be available in another 8 weeks. Currently apps, blah, blah, blah. How should you drive growth? Yeah, for sure. This is what I told you, Sibaji. If you want to get 100 million plus on exit, go to the US, fill out the form. Do you happen to know if K-12 teachers in the United States buy courses for their own money? Here in Romania, we have 10K paying clients. I don't know. We should test, Christian. We should test. Again, it does not matter what I think and you think. Everything should be tested. Everything should be digitalized. Probably we can, this is something interesting. It depends on what pain of these teachers do you solve. Thank you. I've already tested. I have a very small number of customers. Maybe something wrong with my testing. How do you think correct testing should be? It's iterate, analyze and iterate. Show it to somebody who understands how to market things in your space. I don't know, without seeing numbers, without seeing it's really difficult. Are you paid in sales percentage or we co-own the US branch? We are, so look, we are VC fund with a startup studio model. So we don't get paid by sales. We get equity if we invest in a company. We get a percentage. Amit, I'm a solo founder. Can you assist me in finding a compatible co-founder in the US? Probably not. We are not a matching co-founder thing. You can try to do it somehow. I don't know. We are not matching founders now. This is not what we do. Probably in the future. What is an average equity share for 300K? It's negotiable. There is not like average. It's negotiable. What stage of business are you interested in investing in? Pre-seed and seed. For us, so look, our feature is that we can test the product even before traction, and we can help to get the traction. This is our feature. So we can invest in pre-seed. Any cases of investment failures? Not yet. We are too young. But a lot of fails in franchising. We sell courses for teachers. We are a 3-year-old startup. So you have how to calculate LTV. So look, you have amount of revenue which you generated up to date. Let's say you generated 10K. So you just divide 10K by amount of clients you have. It's not LTV specifically, but it's more or less LTV. So you have 10K revenue and you have 100 clients. So divide 10K with 100. So 1,000. So sorry, 100 is an LTV at this case. It doesn't matter brand. So it could be pre-seed or seed. It does not matter. What's a good data company or investment for you? What is a data company? I don't quite get it. Can you repeat the question? Marina, thank you. Can you give us an idea of how much equity would it be? Like 50-50? No, it's not 50-50 for sure. We take less. It's all depending on the valuation of the company. If you have these questions, you can probably fill out the form and we can see. Okay. Probably I answered all of them, right? Do I have any new questions? 33 questions. Nice. So you're quite active. Okay. Nice. Oh, okay. One more question. We are a Canadian startup targeting international students and Canadian universities with the market size outside of Canada. We plan to expand to the US, which had the world's largest target market. Yeah, of course. Yeah. 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 I mean, yeah. Actually, we know the niche a little bit, and we already know the landscape. We already know the market size and the market gap here. So yeah, fill out the form and we'll see. The US market has a gap in it. Okay. If you don't have any questions, we can finish, I guess. So yeah. Yeah. Thank you all for, okay, one more question I see. Yeah, that's great. I know that you guys, I understand that you have a lot of problems. I mean, I know how to be an entrepreneur, right? So I mean, I was in this place and I respect that. And I know it's difficult to operate in an environment which you don't understand. And this is what we are doing. So we have a lot of experience in business, specifically in B2C business, and we are, willing to share it. And probably if you like this webinar, if you see the feedback from this webinar, if you like, you can, by the way, if you like the webinar, you can say something in my LinkedIn post, because if I see the feedback from it, if people like it, probably we can repeat it with a different topic, specifically on marketing, or specifically about market size, or specifically about finding the gap. So if you want us to have more webinars, just write about it in my LinkedIn page. For example, I have a post about this webinar right here. Give me a second. Show all activity. So here, you can go to my LinkedIn page, and there is a post here. Wait a second, here, right? Oh, sorry. So just write that you want one more webinar, and maybe you can even write a topic about. So what topic do you want to have a webinar about? Give me a second. I can copy a link. So you see, if you want us to speak more about topics and share our experience, we are ready to do that. Okay. This is a link to the past. Okay. So yeah, I'm sharing the link. So if you want us to have more webinars, write a topic which you want us to discuss, and feel free to share, as I said, my LinkedIn page or our Google form with other founders who probably might need our help. And thank you for your time today. I hope it was good, and thank you a lot. Again, if you want, so what the last word I would say, if you want to have an exit with 100 million plus, if you want to scale your products everywhere in the world, like worldwide, the US market is the best option. You should firstly try to go to the US market. If you fail, later on, you can go to your local market. You can come back to your local market. But US market is the best market with the big opportunities. So it's better try and fail and then iterate than not trying at all. Yeah. Thank you, guys. Bye.